Welcome back. We are ready for our last guest speaker of this conference, Pahle. A few words to introduce him, though most of you probably know him very well. Michael is head of the working group Climate and Energy Policy at PIC, the Potsdam Institute for Climate Impact Research. Again, he has many commitments. Among the others, he's the principal investigator on European climate and energy policy in the Ariadne project. He advises the German government, the German parliament, the European Commission, the European Parliament on a set of topics, in particular on the development of emissions trading. And his research is exactly on emissions trading, climate policy, but also public support for carbon pricing. And as you see, emission trading will be the topic of this speech. It has also been the topic of some very influential, I can say, publications that Michael has written in the last few years. So, having said that, Michael, the floor is yours.
Yeah, thanks so much for the introduction, Simone, and for the opportunity to talk about my very favorite topic. I'm, in fact, a specialized academic, I would say. Since the last 5 or 6 years, I've become so obsessed with the emission trading system, but I think I'm not the only one in the room. I'll, of course, talk about the topic today. To manage expectations a little bit, don't expect anything mind-blowing. So what I'm going to talk about today is basically thinking out loud. I'll try to bring together some recent policy developments, my take on it, my experience from the advisory stuff and consultancy stuff that I'm doing, and also a lot of ongoing research issues that I try to weave together into hopefully a coherent whole picture. Getting right into it. So I'll talk about credibility, which is on my mind a lot. It has also been prominent, even though not explicit in the discussions this morning, and especially in Luca's talk, for instance, so the forward-looking aspect and the issue of credibility. What I try to do in my lecture is, first of all, I try to convince you that credibility is not only an interesting topic, that it's also a very relevant topic, and that now is the credibility crunch time for the ETS, and with the ETS for climate policy at the European level at large. That will take some time, hopefully just a few minutes. Then I'll move on to the issue of measuring the current credibility, which is a tall order, but nevertheless I have to say something about it. And then in the third part, I move on to what might help strengthen credibility going forward. And this is very much thinking and discussion going on. So expect something that is very open and probably will raise more questions than it answers. So I start with what has become, I think, a very important research issue or research paper in my career. So 1.5 years ago, together with Simon, who is also here, and a couple of other colleagues, we published a paper looking at the current ETS after the last reform and calling this or stating that the last reform has ushered in what we call the ETS endgame. And the endgame is a metaphor for saying that there was a reform or a tightening of the cap that was extremely substantial, or you could also even call it radical. Before the reform, we had a situation where the cap would go down gradually, step by step, in a not very steep way until 2057, meaning that the last new allowances would be issued in that year. And that's not the very far future, but it's also not the near future either. So if you are an investor or something, you're considering building a new installation, you have a lot of space between now and 2057. But things have changed tremendously with the reform, because now the cap will go down to zero already by around 2040. There is some discussion about the precise year, but basically it will be in 15 years from now, and investment-wise, that's around the corner. And what we did in this paper, we just run the calculation of extrapolation, which I don't know why it was a surprise to many people, but it's all basically legislation. You just had to do some very simple algebra. But we did some more. We used our numerical model to analyze what the implication of this would be. And this is shown on the right. So it's basically saying it's depicting emissions, and the stacked bar is overall emissions, and that apparently need to go down over time. And the green, the colored areas correspond to the different sectors. I mean, this is as boring as it can get. So I think you see thousands of these pictures. At least I see it many days, basically. But what is really interesting is when you relate these figures or the order of magnitudes to actual developments. And what you can see there, and I want to point your attention to specifically to the industry sector, which is depicted as some mixture of yellow and red and brown. This is a very high share of emissions of the industry sector that's regulated under the ETS, and it will go down rapidly. So it will roughly be reduced to half its size or even more between 2020 and 2030. And if you have some idea, I mean, we heard some talks about the industry sector, what has gone on there in the past. It was a relatively dormant sector, so to speak, because there were a lot of free allocations and so on, and people have basically continued with their business models, and now they are asked to reduce their emissions by more than a half within just basically 7 years. I mean, we're talking of 2020 here, but the reform only was passed into law in 2023. And this is, of course, tremendous. And so it's a big ask, and it raises the question, and it's something that's a question I have regularly to answer when I present these results. And I get the feedback, hey, looks all nice, I understand, but do you think that will really happen? And really happen is basically colloquial for, do you think this is credible? Do you think the cap will be really credible? And you can see this by making that thought experiment. If that level of emission reduction would not take place, this would imply a stronger rise of the prices because allowances would get scarcer and scarcer. And we are already seeing in the modeling that we are doing price levels, sorry for the small font size. It's tough to get modelers to use larger font sizes. I don't know why, but I've been trying for years. But we are already now in that scenario at a price level of around 200 euro per ton in 2030. And the slower the progress, the larger the price increase would be. And that in turn would make things, or would put credibility that policymakers will really follow through on this, and this would be an acceptable price level, puts it into question. And if this would not be a lot in itself, the overall situation is, well, gloomy, I would say. So there's very recently, ArcelorMittal, one of the world's largest steel producers, announced that it will stop or put on hold all its decarbonization activities. So that's a lot. They are active in many of the European member states. If you follow the steel discussion more closely, you would also know that ThyssenKrupp, a major German steel producer, is close to bankruptcy would be too much, but it's laying off a lot of people. So are really considering selling off the steel part of their business, and there's a lot of pressure here. So when you look at the industry, I mean, in terms of what is, in terms of the degree it's about to implement what we have seen in the modeling, so it's a far cry from even getting this done. I mean, there are plans everywhere, but turning these plans into actual projects and investment activities, that is a far cry. Adding to that is the situation, the overall economic situation, and I don't want to add one gloomy message after another. I will do so for a time, but I do not want to linger on it too much. Is the overall economic situation that we are in. It's also not well, and that of course has ramification for the firms regulated in the ETS. And then, last but not least, which is also not a surprise, also politically it's not, well, going very well. That's of course nothing new. I don't want to, linger too much on speculating about politics, but it's clear that the general sentimental environment that we are now having is less enthusiastic about climate policy as the previous parliament or the overall, electorates were. That raises the question, okay, can we see, if we take a look at one side on the really high ambition and the need for the strong progress we would need to see for decarbonization, and at the same time at the enabling conditions or preventing conditions, you would rather need to call them, doesn't that the race is the cap still credible? Yeah, again, it's not a very encouraging question to ask, but I think specifically as scientists, we need to be honest, we need to think this through, because we are not interested in the fact itself, but rather at the ramifications and what we can do about it. And why we should matter is credibility after all is something in the long term. You could say, okay, just take a go and then see what comes out, and maybe things change after a few years and we can be optimistic. But what is really essential, that is so important to understand for emission trading systems, is that you have an intertemporal market. So these markets very much work through expectations. So do not people look at the situation as is, but they look forward. At least that's what we expect as economists, and Luca has analyzed this in the morning. And so the thing that happens, at least in theory, is that if there is an expectation, and here drawing on the work of Stephen Salon from a few years back, if there's an expectation of a future price-reducing intervention, then it reduces the anticipation alone reduces short-term prices. And so this is the way he has put this in equations. You probably all know that the simple hoteling rule, so in an allowance market, the price would rise with the rate, with the discount rate over time. So that would be the left part of the equation, leaving out the second term on the right side. And the second term on the right side is exactly this anticipation of a future intervention. Alpha is the hazard rate. And the second term is the modificator showing to which extent prices would depress in the short term. You cannot solve it easily because it's a difficult differential equation, but you can discuss how it would evolve qualitatively. And this would basically pretty much mean lower prices in the short term that over time would rise more steeply than the regular cost optimal price path. I think that's hopefully easy to follow. I think it's quite intuitive. And let us assume that there is the expectation of a future intervention, which is coming from low credibility. Then even if there would be no intervention, we are on a not cost optimal price path because we are reducing or mitigating too little too early. This is because short-term prices are depressed, implying that we would need to mitigate much more in the longer term future, so steeply rising prices. And in such a situation, if you have prices that rise very steeply, you have relatively high adjustment costs, and that means a higher probability that there will be an intervention in the future. So it's a bit of a hand-waving argument here. It's an appeal to your intuition, but I think the general intuition is easy to understand. The anticipation of intervention creates a price path that exacerbates the risk of intervention. So we could have end up in a vicious cycle that further undermines credibility. So this is why credibility is so important, not because it's far away in the future, because the anticipation has a backward induction effect on short-term prices, so to speak. So that's for the motivation, for the general understanding, and why we should care about credibility already now and not just in the future. Now about measuring. So as I already explained, or if you buy into this theory, you would also buy into the first statement. Low credibility should be reflected in current market prices. So they should be somehow here, and low credibility would mean it should have a price-reducing effect. And in order to measure this effect, or at least get an idea about the order of magnitude, it is helpful to distinguish between the short-term component and the long-term component of the price signal. And Luca already did this in the morning, and I was tempted to draw up a figure, but I think it's actually too intuitive, so I can explain it using simple words. The short-term component are the price we would have if we would have an ETS without any banking. So people would just look at the short-term annual marginal abatement costs. So this would be the short-term component. The long-term component, what is put on top through the intertemporal channel, basically through the banking or the possibility to bank allowances and hedge for future higher costs. Low credibility would then mean that it depresses the long-term component because you would stop or you would more heavily discount the future. Yeah, and specifically in anticipation of the tightness that I showed at the very first slide, you say, okay, if this is not credible, I mean, what do I give about the future? Someone will come and intervene into the market And well, I just look at the short-term factors. So this is how it would be. And then coming back to the question, how can this be assessed? It can only be assessed using modeling counterfactual prices. And the way we can do this is, in general, and this is a bit of a short here, this is not very elaborate, that we use different model prices and we use different model specifications that range from very far-sighted, so perfect foresight with a low discount rate, down to a myopic version of an ETS model. It could be also a rolling horizon version, which is an extreme version of a short-term model. And the way in which the different versions of the model capture the currently observed prices, so the smaller the distance between model prices and observed price, the higher the probability that the observed prices are consistent with the discount rates that we used for the modeling. So I'm going to show you how this can be put into practice in a moment, but I also would like to mention that it's not as straightforward as I've probably described it or insinuated it. There are identification challenges because we can have a smaller or shorter time horizons could also emerge due to a number of other factors. So very generally, if you have uncertainty, if limited information, if you have frictions and so on, or you have a company that might be confronted with its own bankruptcy, you're probably not inclined to look very far into the future. So this is as a caveat, and this is important to point out, but nevertheless, it's, I think in terms of measurement, the best what we can do. So yeah, doing that, and in fact, there's some work that has done this, among others, work done by myself and colleagues. But the first work that really did this sort of backcasting exercise was work done by Simon and his colleague, and who implemented such a rolling horizon model and then found that for prices before the first of the two second major reforms that we saw in the last years, it could be very well captured with a rolling horizon model. So telling us that, and you can also see this here in the figure on the right side, that the very low prices before 2018, when they took off for the first time, are very consistent, which is technically correct to call it consistent, with an ETS model with rolling horizons or rather myopic actors. But then what is interesting is things changed. I mean, just purely from observing the price level, one knows, okay, there was a substantial shift in the market. And prices went up to levels of around 100 euro per ton in 2021, 2022. So that's a major rise. And it's interesting in itself, but from the point of view of credibility, it begs the question, okay, why did we see such an increase in prices? Was it because the reform, both 2023 and the 2018 reform, substantially tightened the cap? So was it the effect of increasing scarcity? Or was it, in addition, a ramp up of credibility that is somehow related to the reforms? And what we find is, so we also run an ETS model at PIC that is relatively detailed, and we have the aspiration that it can explain prices or at least backcast prices to some extent. We developed a myopic version 2 that is similar to Simon's rolling horizon model. And then we looked, okay, which of these versions, the perfect foresight model version or the short-term myopic version, is better able to explain or backcast existing prices. And this is shown here on the right side. The myopic version corresponds to the lines that are yellow, and the perfect foresight model corresponds to the lines that are grayish. And what you can see is that there is an effect of increased scarcity, of course, also in the myopic model, even though the scarcity is very long-term. But to explain or to come close to actually observed prices, you would also need to make the model far-sighted, implying that actors in the market have become more far-sighted. So this is the interpretation, or this finding is consistent with the interpretation that the reforms have also boosted credibility, basically from a relatively low credible oversupplied market to a high credible undersupplied market. And if you want to think about, okay, what is the mechanism behind? I think, again, this is more intuition rather than evidence. But it's clear that you can only strengthen credibility if this reform is costly. I mean, politicians make a lot of announcements daily. I mean, probably not so much in the EU level, but on the national level, I think there's quite a panflation of announcements of new targets. But if you implement some new policy and put it into law, into a process on the European level, so that means something. And it's usually, if it's that size, it's politically very costly. And it was very costly, and the explanation is thus that the capital that was invested in this reform, and it was really big, also boosted the credibility, which eventually was a good portion of the price increase. So you can really see this by comparing on the very right side of that figure, the yellow line and the gray line. So most of the price increases are due to the boost in credibility as identified through a longer term horizon in the model. Yeah, that's great. But now, what did we see? Prices not going up again, more and more and more, but prices went down again subsequently. They reached a temporal low at the beginning of 2024, and now hovering around the range of 60 to 80 euro per ton. And that is quite interesting because there are different explanations again. I mean, from where I'm coming in my talk, you would say right away, okay, the ETS has lost its credibility. But that would be too easy because we do have the short-term component too. And you cannot really say if a drop of prices is due to a reduction in the long-term component or due to a reduction in the short-term component. The Financial Times earlier this year had a clear take on that. It diagnosed that there is serious market myopia, saying, okay, people are not looking in the future anymore. To be precise, it attributed this to the lack of the market stability reserve to really make sure that long-term scarcity is still reflected in the prices. But also when you look at the short-term fundamentals, so basically everything that determines marginal abatement costs and supply is bearish this year. You have had much lower gas prices than you had in the time of the energy crisis. You had much lower industrial production. I think Europe-wide industrial production went down 10 to 15% or so. And you had additional supply of allowances coming from a program called RePower. It was meant, at least officially, to dampen prices that at least some policymakers expected to be very high at this point in time. But anyway, so the point I want to make is it's not so clear that this is all due to credibility. This can equally be attributed, at least partially, to these short-term fundamentals, but it's nevertheless sufficiently motivation enough, I think, to pick up and think about what can we do about credibility. And I mean, in general, we could also replicate our analysis and adjust the short-term price fluctuations. That was something we probably are going to do in the near future. But it's relatively clear also from looking at the broader environment and circumstances that there must be something behind that. So, moving on to, what might help. I'm good in time, huh? You are very strict in time now, I think.
No,
like more than 7 minutes.
Already discounted for.
Credibly discounted, or so.
We can get 10 if you behave.
Okay, I'll skip the comment for sake of time. Before going into the recommendations, and here I take the perspective or the point of view of an economist, but I also think I should explain a little bit what is going on at the moment and in terms of current policy making. And we already heard about the Clean Industrial Deal this morning, we heard about the Draghi report and so on, and I think policymakers are now extremely keen to get these investments going. I think all Brussels is behind plans like that. I mean, we need to bring investments on the way. And there are a couple of things you can do. Some are really no-brainers, like removing non-market barriers and red tape. It's usually easier said than done. But I think no one will actually be against it. And from an economic point of view, it's a straightforward issue. Subsidizing investments is also big talk now. In the Draghi report, one of the proposals that touched upon climate policy was to ramp up the innovation fund from ETS revenues to deal out subsidies. So really the talk of the day, the direction is to get these investments going. And it's something you can jump on as an economist. It's quite interesting. There's a lot of good reasons to be against industrial policy, but there's also a new economic research on industrial policy that describes a more nuanced picture of that. That is quite interesting. A lot of it is coming from the US, as always, but the IRA is, one could say, a sort of green industrial policy too. So this is very interesting stuff on the general strategy level, but also on the instrument level, and a lot of emergent research is coming up, and it's very interesting to go farther on this. And I can say from my own experience, just last week I had an exchange with the Commission, and they are very, very interested in research like this. And it's really about how to transfer and restructure risks when supporting investments. Interestingly, though, the ETS rules and governance themselves are untouched. So this is a kind of holy grail. It's here. It's been adopted. There are rules. You don't change rules. So no one is, seriously discussing in that direction, I would say. And but this is where it's getting more interesting for economists, especially environmental economists, because we know, and we have it goes way back. There's a long discussion on climate policy about how to make commitments credible. So that is what we have a rule for the cap. This is a commitment, but the question we ask ourselves, is this commitment credible? So it's basically what I've been discussing. And if you look at the literature, there are some recommendations. So commitment, you can make commitment credible by using rules rather than discretion. This goes a long way back to the seminal paper on ultimately monetary policy by Kittel and Prescott. But they also need to be sufficiently flexible to be stable over time. Because imagine a rule that is in place no matter what, and is a rule that stretches over the next decades. I mean, how can you tell now, with the limited information that we have about the future, that it would be a good rule even 10 or 20 years from now? So it must have, and this is a first best consideration, it must have some flexibility. Otherwise, chances are that it will crack, and that the net benefit calculations will be much against it. In at least some developments in the future. So how can we make sure that we get credibility in these commitments? There's one strand of research that looks at how to ensure stability. There has been this discussion about a carbon central bank. I think every environmental economist that takes himself or herself seriously has at one point in their career proposed a carbon central bank. Have you proposed a carbon central bank?
Yes, recently.
Yeah, okay. I think I also did once, even though I think the value of this proposal is not so much in implementing it, but rather in instigating a discussion that is worth having, namely about the governance problem. And if you think this through, it's really problematic, because how would you get support for delegating it? How could you convince politicians to give up authority on that? Would it be actually better than the market? What kind of models would it use? And then what would be the stability rule? In terms of monetary policy, we had a long discussion about the stability rule and broad agreement. Do we have agreement on the stability rule for the ETS? We don't even have a discussion. Luckily, new stuff is coming up that is making a proposal or analyzing or proposing in a direction, among others from Luca, a very interesting paper, but also others who are proposing such rules that ultimately are meant to make the cap more flexible. I don't know if you intentionally address that issue, Luca, or if it's more like a coincidence, but it's very important and very valuable research. But there's one thing that is really challenging here, because I think most of the considerations for a flexible cap rule are at least implicitly assuming that you have a supply over time that is not so structurally tight in a very short time period. So that is really the big challenge we are facing here. So how can you define stability in a political or an economical situation that is by definition unstable? So there's some sort of tension here. And what we ultimately need is, we have a one-sided flexibility problem. Because if we move down with the cap so tightly, chances are we rather need to bring new supply in the market rather than to take old supply out. So it's really a one-sided problem here. And that brings us back to some other really pet topics of economists. And I'm again looking at you, Simone. Linking to other carbon markets as the expert, and integration of new supply that is non-conventional in the sense that could be negative emissions, so carbon dioxide removal technologies and so on. These are prime options to increase supply that would be then channeled to some sort of mechanism, of course. But the very fundamental problem is that we have run out of supply by intention and by design. And then I come to my last slide. I think I'm a few minutes over, but doing not too badly. So are we back to where we started 30 years ago? Linking? And then a very interesting observation was brought into the discussion by Dallas Berto, a colleague from the US, in context of a work that we are currently doing. And he asserted that there's something he calls a linking paradox. And that paradox says, the higher the value of linking, so take the ETS that is increasingly tight, has increasingly higher prices, it would benefit a lot to linking from linking to a system that has abundant supply and relatively low prices. But the higher the value of linking, the more difficult it becomes. And the reasons are that the larger the price span or the larger the price gaps, the larger the distributional implications. This is when you link to high integrity system, for instance, ETS and ETS2. But it's also the case if you link to other markets that have lower integrity or carbon removal technologies that have lower integrity. So we are in a very problematic situation because implementing linking is a problem for credibility and not linking is also a problem for credibility. The option space is rather small here. So, and the only way out, and this is very much preliminary, very much current thinking. Actually, I just got this morning. So, well, I want to throw it out. There are basically two options that are left. So either we solve the linking paradox, but we need to do it quickly. So we basically just have a few years left in anticipation of the cap, coming down so quickly. Or we change our thinking towards a cap rule that ensures more temporal flexibility. You can now, add it up to what that would mean. I'm not saying explicit, but this is the sort of flexibility that we would need to bring in or that we could hypothesize would be necessary to ramp up credibility again. And here I'd stop. Thank you.
Thank you, Michael, also for bringing us back to linking and to 30 years ago. So we're back, as you were saying, to the starting point. If I may add a very quick comment, the adverb that you use quickly for the first option is probably unlikely. Because my personal experience with linking is that it's very slow. You know, I'm a big supporter of linking, but apparently it takes much time. So we probably should reflect on the second option, but this is a personal consideration. We are running a bit late, but I cannot resist opening to one or two questions from the audience, if there are. Luca, unexpectedly.
Of course. Can I throw out a very pessimistic view? You were talking about, or a little bit contrarian about what also Aldo you were talking about earlier of need of, we need to price, we need to price in these externalities. And maybe connected to what you were just saying, Michael, about interest from the European Commission. Is that interest in socializing all his basically non-changes that we had so far due to this slow-moving industry, basically industry not changing, not reducing emission, and all these set of alternative complementary policies will be just like the carbon contract for difference. So you basically, we understood that carbon pricing is not actually working, and we're going to socialize a lot of the costs related to that. And basically taxpayer and picking up the tab.
Is carbon pricing not working here? I think it is working. I think it's just market prices reflect what is the case more broadly. I think they are information efficient. And if they reflect that we are in a state of low credibility, then I think this is valuable information. I mean, there's a bit of a controversy about the interpretation. So some would say, okay, yeah, well, we have a lot of pressure now. Thank God carbon price is so low. but that would mean just shifting the effort into the future and with the usual problems that we know about. So there are two interpretations here. And I think, in order for these whole subsidies and complementary policies to work, we need to have a stick in the background. And this is a very important point, because we are currently negotiating the rules of the game. So this is the end game. The game, what we had in mind with game, was the negotiation of the rules of the final phases or the very radical phases of the transition. And I had that experience when observing how the German coal phase-out was negotiated. The negotiating position of German policymakers was much better when the ETS price was higher. Because they could always say, look, here, we do something for you, but you have to deliver, and if you don't deliver, you will suffer in the end. And that can only work, even a very high ETS price could work if in the end only a small number of firms would be affected. It's not just the level of the price. The degree of political acceptability or problem is price multiplied by affected firms. And I think this is a component, this is an agency component of that whole strategy, in which carbon pricing in the ETS plays a particularly important role. But this is from the point of view of the political strategy. And really getting the right balance between, okay, we are supporting you in that transition, but it's conditional. So if you don't accept our offer, our reasonable offer, then you will suffer in the end. And this threat can only be credible if you have something like the ETS in the background. I don't know if that answers your question, Luca, but I think ultimately it comes down to that.
I think what's key, what you said is when you have a relatively small number of companies at
Yes.
risk, I think that at some point, if you realize that there are a lot of companies at risk, we were just discussing during the coffee break,
Yeah.
and it becomes really difficult to
Then it
actually
becomes
compete.
really difficult. Then you cannot follow through on that.
Thank you.
Okay, take one more.
Hello, I'm Matěj Opatrný from Charles University in Prague. So you were talking about the credibility, and it was measured by a trait. So basically the analysts who are aware of the problem are delivering the solution for the measure of credibility. My question is what about the non-experts? This kind of normal population who are aware, it's just like looking on some newspapers, because coming from the Eastern or post-Soviet Union country, we used to have these 5 years goals, which have never been met. And that second option, cap rule, that ensures more temporal flexibility, it means that we are actually decreasing the goals, or the goals are changing within the game, within the time of the game. So the credibility of the system, which is seen by the non-experts, by the normal population, could actually decrease, because they will not believe in it in a way.
Yeah.
So how do you see this problem?
First of all, the ETS is an expert market, and price signals form through the opinion and the information that experts have. Ultimately, it will affect non-experts. They will not know what's happening to them. But of course, the cause of effect can be established and will be established in the political discussion. And we are already seeing the ETS throwing a lot of fire, specifically the new one that will have an impact on consumers more directly. And in terms of, we are already seeing something in terms of more temporal flexibility. We have seen proposals from Poland to postpone the implementation of the new emission trading system. You could call this favorably introducing temporal flexibility. You could also call this pushback. But I think the most important issue here is that ultimately credibility rests on the fact that ETS is a rule-based system. And having an intervention, an ex post reaction saying, okay, let's postpone for a few years. This is not rule-based. And if you postpone and then after a few years, okay, we're still in a bad situation, let's postpone for another few years. So it's endless and endless. So you need to build in this temporal flexibility as part of the cap rule or the supply adjustment rule. This is why it is so critical, because you preserve the very foundation of credibility, which is the functioning of the rule. And of course, everyone is reluctant to bring this up in the discussion, because it's such a slippery slope. If I would suggest, okay, well, let's introduce some additional supply, we're actually having precedents for that in the ETS2 already. So there is some sort of special allowances there. But if you start making suggestions in that direction, you would create the impression, okay, you're giving up on ambition. It's a really difficult, dangerous, slippery slope. But at some time, I think we have to be sober-minded about this because we want to have compromise. Without political compromise, we will not get an ETS that's anywhere near high credibility. So this is why I'm thinking we need to think in this direction, but we need to think about temporal flexibility in a good way, rather than in a politically reactive way.
Okay, thank you, Michael. I unfortunately have to close the session, but obviously the conversation can go on. And I thanks again Michael for his contribution, very much appreciated.